This is educational purposes only. Trade at your own risk. I'm not an advisor or any of that. This is just my own personal trend review journal, etc., etc. Okay. All right. There's certain behaviors and lessons to be learned from. There were some trends today in the Dow, and definitely easily tradable, in my opinion. You don't have to be a rocket scientist, but at the same time, understand that there's certain indications that were given that were bearish but were really bullish. So it's like this with any mechanical indication. You really need to be able to judge it. Remember, indicators give you facts, which is what they're supposed to do, is indicate facts or behavior or something, and then you kind of interpret it. Well, that's just my opinion, but anyway. So over here, you had this wave up here, 1, 2, 3, 4. This was a pretty nice wave, and when it pulled back, it had no supply. So this is the quintessential low volume pullback, and I like to observe this because it happens a lot. Now, maybe a lot of people call it a flag or something like that, but the point is not flag. The point is supply versus demand. And we're going to switch to volume perspective. You can see 113, which is really, I think 11,300 on this wave, and then 25 down. 113 up, 25 down. It's very clear what just happened here. It's a takeover, but let's say you're not convinced, right? Where is the point? Where's the point to be convinced is the higher high, okay? Because it made a higher high. That's how you use confirmations. When you have a bullish or bearish indication and you're not sure, just wait for a higher high or a lower low. That it serves as almost a follow through, or some type of additional indication to give you more probabilities on your side and confidence. Anyway, so it went up on 113, down on 25. That was the low volume pullback. Went up on 11. Don't be confused by this. It just means it's not ready to go up right now because it's low. Then it comes down on 32. 32 is also not a lot, and then makes the higher high. Now we want to get in on the pullback. The key here is knowing where to get in and stop placement, because these guys, they know for a fact that okay, the longs are in here. Where's their stop? Their stop is going to be under here. That's what their stop is going to be, right? So just be very careful about like where to put your stop. Okay, if you're putting it on the prior pivot low, that is the worst place to put the stop, because the prior pivot low or the prior pivot high, the prior pivot is what is used for targeting stops. It just is, because you know why? Because that's what the books teach you, to put stops. How do they do that? They tell you a trend is higher lows, right? So they'll tell you this bullshit right here. This is what the bullshit is. They tell you a trend makes higher highs and higher lows. If that's the case, then the trend shouldn't come down here. The price shouldn't come down here because it's making higher highs and higher lows, right? So this is the number one thing you learn about trend. A characteristic of it is that it makes higher high and higher lows. But this is bullshit. Alright, this is used to screw the public, because the public will, if they believe there's made higher highs, higher lows, they'll put their stop here, right? And what do you think is going to get targeted? Right here is what, that's what's going to get targeted. And not only will it get targeted, it will get targeted after the higher high, because the idea is, oh, once you make a higher high, there's a trend in effect, right? So over here, the belief is that we have a trend and it should make a higher low. Therefore, the stop is right here. And what happens? Screw job. Right there. Bang. Okay. So now, again, it makes a higher high, right? Makes a higher low, makes a higher high. For sure, they're going to take this area out. Okay, because the idea is, you're making higher high or whatever, made a higher high again here. This is definitely going to be taken out. So that's what you need to observe, and make sure your stop is in. I would make sure my stop is in here, because I know they're gonna run this. They're gonna run it here, and they're gonna run it under here. And that's what happens. This is what I call a screw job. So they do a screw job over here, and the real word is shakeout or stop run or whatever. Sometimes they call spring, whatever. But this was the spring, and the spring got sprung again. So you just really need to know, like, even if you're right, you're gonna there's another screw job saying called was it keep tight stops or something like that. There is no way tight stops, like, that's the dumbest thing that I don't want to say too much, but if you keep tight stop, there's no way to get a trend, because a trend has rotations. It goes up and down, right? So if tight stop will get you stopped out here. After this bar, a lot of people will put their stop below it and it gets stopped out. After this wave and this bar here, after the breakout, they get stopped out again. So this is tight stops lead to stop runs, and this is what you hear this bullshit on the internet, and all these speakers who think they know what they're saying say, oh yeah, keep your wrist small, keep it tight. That's how that will ensure you don't make money, and also trailing stops will ensure you don't make, in my opinion, just opinion. Anyway, so the idea was you have, and this right here, this is a little confusing, because this is heavy volume, but understand that this is part corrective, and heavy volume, I thought it was bearish, but it's not. And one way to detect it is it doesn't take out this low, and it's part of a normal correction. Like ABC is just like a little different ABC, instead of A and then lower high B and then lower low C, it makes a higher high B and then a lower low C. This also I've seen many times, because the longs get long, and then it is, in my opinion, it's a move to get them out. The other indication was it starts doing this sideways shit right here. That right there. It starts moving sideways like that. Ding, ding, down, no follow through, up, down, up, high end, down, up, high end, breakout, bang, right there. And it's very hard to identify this as a certain pattern. It's just you have to see the lack of follow through, meaning this is a bar, it has no follow through, it looks very threatening, and what happens? It has no follow through and immediate reversal up and a higher high above it. You know, in fact, if I make them all what the green, oh shit, I missed it. Okay, so the green bars are the up bars. Look, it's all green, 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 green. So see, up is green or whatever. I don't like too many colors. Can't stand doing all this. Anyway, so the point is green, 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 green. So they're buying in this area, and I'm trying to let's see the activity. Activity starts increasing right there. So anyway, so if you're long in this trend, one of the things Wyckoff said is wait for a very strong wave and then just sell into it. This is that very strong wave. This is that climax. So get out. And then after that, it did this, which is confusing. It went down on a heavy volume, and this looks like a definite change of behavior. But understand, this is also that part of that ABC type of move, and it doesn't take out. Like, you just have to understand that these selling waves, when they come in, if in your mind you understand structure, like after a rally there's a correction. Correction is this is probably minimum amount of correction. Sometimes there's only one wave, but if you understand that, then understand that you have to think twice. And also, when there's a sign of weakness, you want an LPS or LPSY, which is basically a lack of demand. That is nowhere apparent here. So that helps validate, changes of behavior and sign of weaknesses. Otherwise, it's just a discounted price where buyers who got in here, other buyers who see them will also get in. So you have to see it from the perspective of supply pressing and demand also weak, meaning strong supply and weak demand. Strong supply and weak demand. So this identifies strong supply, but look at the demand that's coming after. It's not weak. Strong supply, but even stronger demand. So that's why there's no turning point. In any case, you just have to know, I guess. Like over here, there's strong demand, weak supply, higher high, trend is initiated. Bing, 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 bing. Over here you have strong supply, but stronger demand because they're buying the pullbacks. Strong supply, stronger demand. So something is going on because the market is unable to break here, but eventually like this, these are pretty strong waves, and I don't know. I'm looking at it. I think one of the things that's indicating strength is that base on the higher time frame. Like, see, on the higher time frame, it looked like this. So this high volume here. So it's very. Do you want to short this? No, it just broke out, and very likely can go all the way back here to test. So this is no man's land in terms of. Well, actually, demand is in control, and the trend just turned up, and volume is coming in, and that is the biggest volume in the range. So here 65 is bigger than 30, 48, 46, 32, 5, 12, blah 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 blah, all the way since the breakdown. This is the biggest volume since, and it broke out on that heavy volume, pulled back to test. I think the trend is up on the higher time frame. So I think got to be very careful trying to look for changes in trend and trying to sell rallies here. I think, even though they're overextended, as over here you see like what is that overbought idea of overbought. I think it's I think the real money is buying the pullbacks, because the higher time frame is showing strength and it just broke out with a nice base. Um, Anyway, take care and bye.